Hey, it's Amy Lewis from the KFBK Morning News, along with my buddy, Brandon Hafley from Catalyst Mortgage. Do you understand the term overlays? It doesn't have to do with nails overlaying, go to the salon and all that. No, it has to do with money, and it has to do with your money, and it has to do with important things that you need to know, especially when it comes to Fannie Mae and Freddie Mac, or Freddie Mac and Fannie Mae. But Brandon is here to explain all of that. So first of all right, what's an overlay?
An overlay is a imposed guideline and or an imposed restriction on a product. So we'll use an example. Let's say FHA will go down to a 500 credit score when lending. Most lenders might limit it to 580 to 600. They're going to say, even though the government says we can do it, we won't. That's an overlay.
So that's my credit rating?
Correct.
Okay.
So if you're a consumer looking to apply and your credit score is, let's say, 525 or 550.
So let me stop you right there.
Yeah.
What's a really good credit rating?
740 plus.
So when you say a 550 or a 520, should we freak out that the credit rating that we just got is a 520, or are we okay still to refinance a loan?
I definitely think you should be concerned if your credit score is in the 500s, and you should be working to get it to the point where it's higher, because ultimately you're going to pay less interest on everything from a mortgage to auto to credit cards.
Yeah.
You name it, you'll pay less interest.
Okay, so then now let's go back to overlay and your credit rating. So how are the two connected?
So, like I say, if Fannie Mae and Freddie Mac or FHA allow you to go to an X credit score, banks and lenders across the board, lenders, banks, doesn't matter who it is, will impose restrictions on top of what the government will allow. And really they impose those restrictions based off of their appetite for risk. It really comes down to maybe how they underwrite files, or how their algorithms have seen that, hey, we might have an issue with this portfolio, so we're going to say, okay, we're not going to do this. Another one might just be credit score. They might say, we don't want to do a mobile home, or we don't want to do high-rise condos for their specific portfolio and risk for them.
Can I ask you a question totally out of the blue?
Yeah.
Let's talk about veterans and buying a home. What are the benefits that are offered to our veterans? And I know we kind of talked about it when we talked last month about this, but I think that for people who are thinking about buying a home and they're a veteran and it's the holidays, a lot of stress, a lot of worries, allay some of those fears.
Well,
if you can.
VA loan's one of the best loans. So even if you do have low credit scores, most lenders will have less overlays for that period. Some still will, but veterans can have zero down, 100% financing, zero closing costs. So they really can purchase with little to nothing, and it's a great loan. You're going to get a great interest rate, and there's not extra mortgage insurance that's added to the loan, which is like an extra monthly fee and so on. It's a really good loan.
Do banks put more restrictions on a loan than like Fannie Mae or Freddie Mac?
Well, Fannie Mae and Freddie Mac are the agencies. Then it comes to the lenders below them, lenders and banks, and then the consumer. So the banks, yes, do put more restrictions on lending than a traditional mortgage lender would before it gets. So if you look at the whole picture, who's the most conservative with lending? Banks all day. 100%, they have their basic vanilla, what they want, and that's all they're going to do. Lenders, traditionally, lenders across the board are a lot more flexible, but different lenders are more flexible than others. So again, that's like we've talked in the past. If a consumer's shopping for a loan and one person says no, shop around.
Definitely.
Because somebody else might say yes. And one thing to know is, with interest rates now creeping up, lenders are going to start to slow down. Banks will slow down. Mortgage business.
Right.
When business slows, guidelines get relaxed. They might say, well, hey, our mortgage channel is slowing down. A bank will say, it's slowing down. Instead of a 600 credit score, maybe we're going to go down to a 570 because we want to get extra business. Even though the risk is there for them and they feel it might be a little bit more risk, they still want to have the money come in. So when rates go up, you see guidelines loosen a little bit too.
Well, let's allay another fear before we go, because when you say they relax so that more business can come in, we're not talking about another potential real estate bubble or anything like that.
No, we're just talking about what
there are a lot of things that you have to make sure happen.
It's the guidelines that the government already allows. Fannie and Freddie and FHA already allow, and VA already allow. You're then going to just see more lenders open up doing those types of products.
Yeah. Now let's just, in a nutshell, overlays.
Overlays is an imposed a restriction imposed by that bank or lender that is going to prohibit going to what the government standard would be, i.e. 500 credit score on an FHA. Most banks might say 580 or 600. Even though the government goes down, they will not.
But if your credit score is in the 500s, try to get it better. Take care of the business to get your credit score better. Just a little piece of advice that I've learned over the years, right?
Absolutely.
If you can, make it better. Just another little piece of information for you to make you a smarter consumer with Brandon Hafley, Catalyst Mortgage. Go to catalystmortgage.com to learn more. That's all you got to do. Go to catalystmortgage.com or Catalyst Mortgage on Facebook.